Casino chip laundering, the Vegas receipt factory. You walk through those gold-plated doors like you own the place, not to gamble, to buy a receipt. You exchange $100,000 in cash for casino chips at the cage. The cashier doesn't blink because big Vegas casinos handle huge piles of cash every single day. You're just another face in the crowd. Now you sit at a blackjack table for 3 hours. You're not trying to win. You're trying to look normal. Maybe you bet $500 per hand, win some, lose some, keep most of your stack intact. You might even lose $12,000 on purpose because that makes your story more believable. After your performance, you cash out $88,000 in chips for a check. Suddenly, your unexplained drug money has become documented casino winnings. The casino now has records that make it look like you won that money from gambling. You just bought paperwork that explains where your cash came from, and it only cost you a $12,000 cleaning fee. But some pros don't even gamble. They buy $50,000 in chips, walk around for 2 hours playing $5 slots, then cash out $49,200. The casino's cameras show gambling activity. The transaction records show a normal night. On paper, the money looks clean. Modern casinos use AI that watches for people who exchange huge amounts but barely gamble. They file suspicious activity reports with FinCEN when the pattern looks off. But back in the 1980s and 90s, this trick worked like magic. Casinos work great for cleaning $100,000. But what about digital money that criminals love even more? Cryptocurrency laundering, the Digital Vanishing Act. You've got $20 million in Bitcoin from hacking attacks. The blockchain shows every move, but it doesn't show real names on the wallet addresses. That's the trick of crypto laundering. Everyone can see it, but nobody knows it's you. Your $20 million starts in Bitcoin. Step 1, you send it through a crypto mixer that pools your coins with coins from many other people, mixes them all up, then sends you back different coins worth the same amount. Step 2, now you swap to Monero, a privacy coin that hides sender, receiver, and amount. Then to Zcash, then back to Bitcoin, then to Ethereum. Every time you swap for a different coin, you create a new record on that coin's system, making it harder to trace where you started. Some trading sites that don't ask for ID let you swap large amounts of Bitcoin for Ethereum without giving your name or address. Law enforcement sees wallet addresses, which are just strings of letters and numbers that don't show who you are by themselves. Some criminals use NFTs to clean dirty money. You create a digital picture called an NFT and sell it to yourself through a fake company for $3 million. Suddenly, your crime money has become art sales. You're a digital art collector now. Crypto gambling sites offer another angle. You put in $10 million in Bitcoin, make some bets, cash out $9.7 million. You've lost $300,000, but now your crypto has a story. Gambling wins. The site gives you records showing your betting, giving you papers that explain where your coins came from. The hard part is turning crypto back to regular dollars without getting caught. Big exchanges like Coinbase ask for ID and have to report your trades to the government. So you use person-to-person platforms where you sell Bitcoin directly to buyers for physical cash or gift cards. You might lose 5% on the deal, but that's your cleaning fee. Some groups run their own crypto ATMs, where you can put in cryptocurrency and get cash out, and they set them up to ask very few questions, especially for smaller trades. You put in $50,000 worth of Bitcoin. The machine gives you $47,000 in 20s. The ATM owner takes a 6% cut, and you walk away with mostly clean cash. Crypto tools hide digital trails, but what if you want to hide money in something you can actually touch? Real estate washing, the property value game. You buy a house in Miami for $400,000 cash. 6 months later, you sell it for $900,000. You just cleaned $500,000. And in this story, nobody asked a single question about where your money came from. Here's how the magic works. You find a house listed for $600,000, but get the seller to accept $400,000 cash by offering a super fast sale with no home checks. You make $80,000 fixing it up. New paint, new sinks, nice grass. Now you list it for $900,000, and your fake company in Panama buys it at that high price. You've just created papers showing a real estate profit of $420,000, turning your dirty $400,000 look like safe investment money. The beautiful part? Houses are worth whatever someone will pay. When your own fake company is the buyer, you control both sides and can set a higher price by using price checkers who will say it's worth more. Some groups keep selling the same house to different fake companies they control to make huge price increases look normal. A condo in New York sells for $2 million to Company A. 6 months later, Company A sells to Company B for $3.2 million. 6 months after that, Company B sells to Company C for $4.8 million. Same condo, 3 sales. Each buyer and seller is secretly controlled by the same criminals, but the papers make it look like the price is going up normally. Expensive houses in cities like Miami, New York, Los Angeles, and San Francisco work great because one sale can hide millions of dollars. When a penthouse sells for $28 million in Manhattan, most people don't question the price because homes at that level trade for huge amounts all the time. Money police might, though. Some buildings on the same block are owned by hidden companies that may hide crime money. Building projects give more chances to hide money because it's really hard to check what building actually costs. You claim to spend $12 million building a mansion that actually costs $6 million. That extra $6 million difference is crime money being cleaned through fake building bills from builders who lie about prices to get extra cash. Straw buyers hide the real owners. The fake buyer's name shows up on all the official papers, but you secretly stay in control through deals you never write down. Some straw buyers don't even know they're helping criminals. They think they're helping a friend buy property for tax reasons. The Panama Papers showed thousands of fancy properties worldwide owned by secret fake companies that exist only to hide crime money. Real estate works for millions, but what if you need to hide who actually owns everything? Shell companies and offshore accounts. The ownership maze. Try finding who owns the bank account. You'll chase it through many countries, and by then, the money's gone. Company A in the Cayman Islands owns Company B in Panama. Company B owns Company C in Switzerland. Company C owns Company D in Singapore. Each layer buries the trail deeper. The company names sound impressive. Global Financial Solutions, International Trade Partners, but mean nothing. Some setups create ownership loops. Company A owns B. B owns C. C owns A. Who controls the money? Almost nobody can tell. You've built a legal puzzle that circles forever. Offshore havens like Panama and the British Virgin Islands build big parts of their finance business around hiding ownership. You can move $50 million, never tell anyone your name except a lawyer who can't share your name, and pay about 1% to 2% a year to stay hidden. Shell companies work, but what if you need an army to slip cash past bank alarms? Smurfing, the ant army strategy. You've got $10 million in cash, so you hire hundreds of people to make thousands of tiny deposits over a few weeks. Welcome to Smurfing. Banks must report cash deposits of more than $10,000, so your Smurfs stay under that line. $7,800 at Wells Fargo, $6,300 at Chase, $8,900 at Bank of America. Each looks normal. Professional operations often avoid round numbers. They deposit $4,783 or $6,129, amounts that look like real paychecks. One Smurf might hit 8 banks in 8 cities in one day, moving around $52,000 while triggering 0 reports. Most Smurfs don't know they're washing crime money. You pay them $75 per deposit. To them, easy cash. To you, a nationwide cleaning operation. Modern bank software spots when many people make similar deposits at similar times, but you've already moved millions before anyone connects the dots. Smurfing needs managing hundreds of people. What if you could clean millions with one pizza shop? Business integration, the pizza shop multiplier. You buy a real pizza place in Tampa for $300,000. Real customers, real pizza. But you're not in the pizza business. You're in the receipt printing business. Your restaurant sells $8,000 of pizza Tuesday. You report $13,000 to the IRS. Where's that extra $5,000? Your duffel bag of drug money. You deposit $13,000, mixing clean and dirty. Now it's all business income. You even pay taxes on the fake $5,000. Cash-heavy businesses are perfect. Laundromats, car washes, barbershops. Almost nobody counts every customer. A Phoenix car wash claims 800 cars daily, when they really wash 550, cleaning an extra $6,000 per day through fake receipts. The problem? You actually have to run real businesses, real workers, real health inspections. You're working a regular job while committing federal crimes. Investigators flag businesses reporting way more than normal. When your small-town pizza shop reports higher sales than Manhattan locations, someone's asking questions. One business is slow. What if you could move $50 million through 40 countries in 72 hours? Layering through wire transfers, the global shell game. $50 million starts in Miami. By Friday, it's touched 28 accounts in 14 countries, making it extremely hard to trace where it started. Miami to Panama, Panama to Singapore, Singapore to Switzerland, Switzerland to Dubai. Each wire adds another layer of paperwork, making the trail harder to follow. By the time Miami investigators get help from Luxembourg, the money's in Malta. Money moves instantly. Investigations move at the speed of international diplomacy. Getting Swiss bank records takes 6 months or more. The money's already gone. You're not wiring from Drug Gang Inc. You're wiring from Panama Marketing Solutions to Singapore Tech Ventures. Names that sound professional, but show nothing. Crypto supercharged this. $50 million becomes Bitcoin in Miami, Ethereum in Hong Kong, Monero in Singapore, back to a Swiss crypto account in under a day. You've turned "where's the money from" into a 9-government diplomatic nightmare. Wire transfers leave digital traces. What if you could hide millions inside normal business invoices? Trade-based laundering, the invoice shuffle. You want to move $5 million from Mexico to China. So you buy t-shirts you never really buy. Your Mexican company claims to buy $5 million in t-shirts from your Chinese company. Real value? $500,000. You wire $5 million as payment. Customs sees a t-shirt invoice. Banks see a business deal. Nobody sees the $4.5 million you just laundered. The reverse works too. Export $3 million in electronics. Invoice for $400,000. Get the other $2.6 million through cash or crypto. Some operations invoice for $8 million in consulting services that never happen. Customs can't check if consulting actually occurred. U.S. Customs processes tens of millions of shipments every year. They can't verify every invoice. You sell one smartphone shipment to 5 buyers with 5 invoices, but only deliver to 1. You've turned one shipment into 5 money transfers. Real companies sometimes help without knowing, thinking they're just buying expensive inventory. Trade needs shipments and paperwork, but ancient trust systems can beat modern law enforcement. Hawala networks, the invisible wire. No banks, no paperwork, no trail. Just phone calls moving $500 million yearly through networks law enforcement struggles to crack. You walk into a Los Angeles Hawala shop with $200,000 cash. The broker calls Pakistan. 2 hours later, Your cousin in Karachi picks up $196,000. No money crossed borders, no wire, no paperwork. The brokers just owe each other, settling later through trade or reverse transfers. The only evidence is a phone call. No bank records, no transaction history. Brokers never meet using coded calls. These networks span dozens of countries, faster than Western Union, cheaper than wires. You can move money from Detroit to Dubai in just a few hours, while banks take days. Modern Hawala uses WhatsApp with auto-deleting messages and Bitcoin to settle debts. The network runs on reputation. Brokers who cheat get blacklisted, destroying their business. Professional money laundering services. The cleaning specialists. You don't wash your own money anymore. You hire specialists moving $500 million yearly for 40 clients at once. Former bankers, accountants, trade experts. They might charge around 10 to 20% to take your dirty $8.3 million, run it through their networks, return it clean with paperwork saying it came from consulting fees in Singapore. Some are lawyers protected by attorney-client privilege. You're not just buying laundering, you're buying legal immunity. The industry works globally. Your money gets placed in Miami, layered in Panama, integrated in London, by different specialists who never know the full operation. The conclusion: every tactic here has been used and studied. AI now analyzes millions of transactions at once, catching patterns humans miss. But criminals keep adapting. It's an endless race with up to $2 trillion at stake. Money laundering doesn't just hide crime. It funds terrorism, trafficking, and corruption. Every washed dollar keeps the cycle going. You just learned how the money gets hidden. Now you need to see what each level of wealth actually feels like. Trust me, you need this context. Click it.